Watermelon.
That's fair. We are working today, guys. But I think we are.
Oh, we're live? I forgot to say totally.
I know, right? But
My bad. You caught me off guard.
We are here.
What's good, y'all?
Oh, man. Super excited. Somebody said, hope all the cousins went shopping. Thank you, thank you, thank you. Thank you for joining us.
I went shopping.
Bruh. It was like there was everything on sale. Everything was on sale. Like, what do you do at that point?
I mean, basically, it was hard to make a decision. It was like, ooh, I could get this. Let me get that in a size 3. No, I'm just kidding.
Wow.
You know, I don't want no size 3.
Thank you for joining us. So Kamari, did you go shopping today?
No, this has been crazy busy time. Something did fell off though.
This is going to be like the super duper episode that, like, honestly, that you would want to have yourself, your family. Go ahead and tell us exactly where you're coming from. We know that it's been somewhat of a rough day for some of y'all, but we thank you for joining us. It's going to be epic. There's a lot that's going to be unpacked into this episode. So grab your popcorn, your water, and, you know, if you want something a little bit stronger, just to take the edge off from what happened earlier today, go ahead and have some wine. But if, you know, your children, go ahead and have juice.
No, y'all need to drink water. Stay with them sugary drinks.
Get some electrolytes also. Yeah. Shout outs to everybody that's coming from around the world. We have a lot of folks from ATL and Baltimore and California today. Oh, by the way, if you're coming from California, we hope that you are staying safe. We hear that it's getting a little out of hand there. So if you're safe, go ahead and just, you know, shout it out in the comment section that you're safe. But yeah, how are you two lovely ladies today?
Well, you know, I just came from a massage. Actually, I feel like I was psychic or something, because for some reason I was like, you know what? I think I need to be extra relaxed on a Thursday instead of the Friday. So
okay, I'm
feeling good.
Okay, and Kamari, what you been up to?
I'm all right today. Yeah, I'm all right. I'm about where the market's at.
Okay, wait, you're at where the market's at today?
Yeah.
Oh wow. So what? You tired?
Yeah. Indeed. How are you doing?
I'm good. I mean, good energy and everything else. I've been like literally psyched about today, like for I don't know how long. It's been a lot. So I mean, yeah, let's do it. All right. So what's up, everybody? I mean, we're about to get this going. I'm Mark Monroe. These are my wonderful people, Miss Jolyn GC and Kamari Bright. And today is Hot Take Thursday. So today is going to be something special, but I do see people hitting us up in the super chat. So Jolyn, you want to tell them about where the money's going, where the coins is going this week? And
yes. Yeah. So this for this week as well as next week, our super chat dollars are going to a wonderful organization called the People's School for Positive Education in Kasawa, Ghana. It is a school that is near and dear to both my heart as well as Kamari's heart. We actually taught art there a few times in Ghana, and it was so much fun. And first of all, these students have a 100% graduation rate, and many of them, after graduating, then return back as teachers. So it's really important that you come back and return. So what you learn, you give back and you bring back. And, you know, at the Come Up, we're all about that, as evidenced by the fact that, I mean, we're here right now. And so that spirit of Sankofa is a value and a principle that is celebrated at the school. And so I'm personally super excited that, one, not only are the super chat dollars going there, but two, we have a generous donation by the Dark Knight to match those funds for 2 weeks. So that's really awesome because these students work hard, and many of them, first of all, they're not charged to attend the school. Many schools you have to pay. So if you don't have a uniform, they will get you a uniform. And just the spirit, they have a huge spirit of generosity at the school. And here at the Come Up, you all know generosity is one of our top values. So I'm just ecstatic. And you can go to the People's School for Positive Education.org. It's long, but you will learn like top 15 facts about the school. Another key thing about the school is that dollars that are generated through donation do not go to administrative cost at all. And that's pretty key because most organizations, you know, they got to take some for administration, which is fine because you got to administrate, but the school is able to do it a different way. So, and I'll be back there next year. So hopefully, God willing, pandemic and all, hopefully I'll be back. So Mark, I see you sipping, and I also see that your mic is muted.
There was a lot of noise in the background, so I wanted to make sure that I wasn't like, you know, I wanted to make sure that I was definitely on. Like, for those of you that don't know, I'm nervous at the same time. I'm like giddy. So, but I would be remiss if I'm like, a lot of you guys are saying like I'm rocking the new merch. Actually, this is not our merch. So this is actually from one of you that sent me a super duper dope t-shirt, and I actually like the way it fits. It feels good.
Shout out to the colors. I like the colors.
Shout out to the colors. They work. But thank you to, I think it's Tippy Shorter for
Tippy!
merch. And
hey,
it's super duper dope. So it goes with it. So y'all ready?
Yeah, I want to talk about all this red we saw. We saw sales. I mean, Lord have mercy. Let's get into it. So the Dow today, y'all, was down by 807.77 points. That's a huge dip. Then we got the S&P 500 at minus 125.78 points. And then the NASDAQ, woo, cousin. The NASDAQ was minus 98.34 points. Okay. Then we talk about sector performance. Sectors you don't hardly ever see in the top were on the top today. So we had some rotation, we had some sell-off, we had all kinds of stuff. So energy was first, followed by utilities, then financials, and then for our bottom three, communication services, consumer discretionary, and tech comes at the very, very bottom. So for our stock pick list, which you can find at on IG at that Come Up series, as well as Facebook, as well as it hasn't been posted yet, but it will. In the Facebook group, you will find that as well. And that was created by popular demand. So I'm just letting you all know, like y'all blow me up. So
I was taking impeccable notes, by the way.
No, oh my gosh, what is his real name? I don't know his real name, but on Instagram, his name is at Sell Yo Shoes. He created a Reddit, and his Reddit name is Kale and Cognac. So that's kind of cool. But he created this Reddit, and it has timestamp information for every single episode. And he is dedicated to updating it within 24 hours. So shout out the OG cousin, because that, first of all, it is impeccable. If you just go through it, so you can also find that within the Facebook group called Come Up Cousins. Now there is another one started by another cousin who I don't know, and theirs is called the Come Up Cousins, but the one that's attached to the official Come Up page is called Come Up Cousins. So basically don't add the it's just Come Up Cousins. So you can find notes there. You can find Tamara Prescott's cheat sheet that she made for your stock selectors. Oh. So all of those things, all of those goodies are in there. Shout out to Coach Head. I'm gonna ask her to post her spreadsheet in there as well. Okay. So Pick performance. Got off script. Let me get back to the script because that's what we're talking about. Stick to the script.
We just had this on Tuesday. Stick to the script.
Stick to the script. There's been a lot going on in the come up. So anyway, sticking to the script, we got Taiwan Semiconductor, XLY, RTH. Those are the top three. Now keep in mind, it was red all the way through. Blood in the streets everywhere. And then for our bottom three, we got ARC, which someone, I think it was Portia, referred to ARC as a stepchild. She'll have to tell you all more about that in the comments. And then, or no, not ARC, I'm sorry, AMD. So we got ARC, AMD. AMD is the stepchild. And then we have NVIDIA, which broke past. You know, I had a 520 strike. It broke down, y'all. It broke down to like 515 and then it finished back up at around 520. So yeah, it was a pretty wild, interesting day, but guess who's re-upped? Okay, like I was in there like, what's up? What's up? It's a sale up in here.
Hands up.
Shout out to all of our super chatters. I appreciate each and every one of you. We got love coming from all over the place. Y'all, thank you, thank you, thank you. There's so many of them. All right, so let's get into this news. We had several comments from the cousin, because you know the cousins be up on their fundamentals. So they're reading the news and they are super excited about what is going on in this market. I mean, as they should be, right? We're all here to learn. So let's just scroll through and find one that we can talk about.
Okay. And I guess what we'll do is I can kind of give explanation about like kind of like what to expect and what we expected coming into today. So yeah, a lot of you,
That's a good one.
So a lot of you have been, you know, asking, hey, Mark, you know, what's going on with this market? Like, for example, I mean, Monday, Tuesday, Wednesday, this just felt like somebody even asked me, yo, is this real? And I was like, yeah, it's real. But at the same token, it's like, I always sometimes say, be cautious, watch, but also be cautious. Because at the same token, I don't want you to walk around and next thing you know, it's like something like today happens and then you're sipping your tears. Hence the reason why we said stick to the script. A lot of us knew that this day was coming. We just kind of like didn't know exactly what the trajectory was going to be up to a certain period of time. But then once when we started seeing like, I mean, come on, why is it that we're up over 100 and some change in the NASDAQ today when there's really no significant news that's really pushing the market forward? At that point in time, we realized that this market was already stretched. Now, a lot of you are asking, yo, are we heading towards a crash? And no, we're not. What we typically see is that in these moments, a lot of folks in which that are in their September 18 positions that expire on September 18th, they're probably exiting stage right now. If you were smart, you would be already out of the September 18 positions, whether it's the volatility, the futures, or whatever it may be. Now, you will be having some folks that are staying late in the party, but as the party draws on, you're going to start seeing more people exit. And today was just a beautiful day for people to exit. I mean, think about it. You had Apple trading, what was it, 249, almost 250 million shares. I mean, that's crazy when it typically averages, and we'll get back to that point. But it typically averages about, what is it, 14, 15 million shares traded in a day. I mean, you had Microsoft trading at 60 million shares. You had AMD. Well, AMD typically trades a lot of shares on a daily basis, but they traded almost 90 million shares. You saw Tesla trading significant amounts of shares. The way that you can look at that is, if you get the chance on any brokerage or on any platform, what it should be able to do when you pull up the quote details, it should tell you what the volume was that was traded. And then on the other side, what you should be able to see is what's the 10-day average volume. And that kind of gives you a good idea and good barometer of how much volume is moving on a daily basis within a specific stock or ETF or index fund. So.
There you have it. Okay, so Mark, many of the questions had a lot to do with what you just talked about.
Okay.
So as far as like the like when to exit, I had a lot of people that had those September 18 contracts. And I was like, what do I do? What do I do? So boom, tell your other cousins if they're missing the live to wait until it uploads so that they can watch that and get out if they haven't gotten out yet.
For sure.
Okay, so with the news then, let's get back to the news here.
Let's do it.
Okay, so remember I can't even talk. Remember the, actually we'll save that one for later. We're gonna save that one for later.
They're coming for me, y'all.
No, never that. Okay, so there was mention of the S&P 500 preparing to let Tesla in. So Kamara, do you want to share about that?
Not that particular one. I feel like Tesla is like your boo. Or I know for sure Tesla is Mark's favorite.
So, Mark.
Friendly? We friendly?
That's hilarious. So, Mark, with S&P 500 potentially, saying, come on, Tesla, come join us. What sector, as far as, some of our picks, would Tesla most likely join? Would it be the consumer discretionary? Would it be?
I'm not going to give it away because I want to send some folks on a nice little homework lesson. So here's your homework. If many of you should have already the CNBC app on your phones, whether Android or say, for example, Apple. And if you pull up Tesla under profile section, it should already tell you the sector in which that it's already defined as. Now that can change. I mean, we've seen like how Facebook and Google went from tech company into communications company. But so far right now, Tesla is actually listed in a specific sector already. And for those of you that have also been paying attention from, say, for example, where the wolves play, you can kind of get an idea of what mutual funds and institutional money is doing and who's buying. And that will kind of give you a good idea of where Tesla is going to next.
Okay, so what are some other possible winners that would emerge out of this pullback?
Whew, I mean,
that's a question from a cousin.
Oh man, that's a good question. I'm banking. Well, I kind of gave the first hint away, which was when we went through like the segment where we talked about what's the catalyst, what's the risk, and what's the reward. If you go back and watch that episode, I actually, like I always say, gym within a gym within a gym. There's actually something in which that I kind of left there as it pertains to the subject matter content of what we were studying. And that is actually my pick going in for 2021 and 2022. That is really very much so where I'm focused. But if you want a little bit of a spoiler alert, know that you have to still go and do your own research. I'm going very, very bullish on chip companies going into 2021 and 2022 because of the fact of what I see and how they're integrating themselves very deeply into other sectors and other industries and how they're going to be powering those sectors and industries. The road in the future looks very bright. For example, Taiwan Semiconductor has already produced over 1 billion chips that are now getting ready on deck. Taiwan Semiconductor is also playing with, somebody in which that I'm friendly with to, possibly do some chip manufacturing. Mm-hmm. Just gonna say this: vroom vroom with no sound.
I cannot. Oh my gosh. So there are other questions, and we'll get back to some of these other questions. Kamari, what news would you like to talk about?
I would say rewinding back to the performance we saw in the market this week. Okay. So we saw that huge run up and then we saw the pullback. Yep. I was listening to something that was talking about the difference between technical and a fundamental minded market. Mm-hmm. So I'm wondering, how can people differentiate the difference between when the market is being driven technically or when it's fundamentally being driven?
So typically when you see a correction take place, technicals will essentially start to kick in, where they look for certain technical and they look for certain technical indicators to start to go through. So for example, if after a correction, they typically say that we do some type of retest. It doesn't have to be the exact lows, but it gets close to those lows. That's a technical. When we think about things in which that are fundamental though, I mean, when you get to fundamentals, that's more so like the things in which that you can actually quantify, like for example, your earnings, you know, those types of things, the data, the data that actually makes the news. Those are fundamental. When we look at, like, you're starting to see a lot of investors focus on, a lot of investors focus on volatility and volume. And then on top of that, you have other folks that are focusing on cash. So how many companies out there that have cash and how much cash they have. And they're looking at those as solid winning plays. But the problem with that is that all roads lead back to specific sectors that have the cash. So, I mean, when we look at the fundamental analysis, you can say that they're the focus they're focusing on cash. When we look at technical analysis players, they're looking at things as it pertains to specific studies that have been able to be validated. Like, for example, you're looking at, you know, every now and then you have folks that look at stochastic or Fibonacci. They look at also RSI, which you probably heard a lot about over these past few days, which is the sign that things are overbought. And then, I mean, honestly, I like to say take a healthy medium in between both.
So considering like how the market has really been, in my opinion, like some of the movements we've seen this year haven't been necessarily driven fundamentally. It's like, it's hard to gauge what made the market move. What would you say the majority of movement we've seen has been from technicals or fundamental?
Okay, that's a good question. I would say that a vast portion of this market rally is thanks to the Fed. If it wasn't for the Fed stepping in and giving the market a solid rounds of steroid shots, this market would be a lot lower. And that's why I tell people, don't just pay attention to the stocks and the companies, pay attention also to the economics of what's happening around the companies, because those things matter. They have significant impacts. I would also say what's making this market move is the fact that you see other asset classes are honestly sleeping. I mean, I hate no shade towards folks in whom wish that are in the bond markets, but honestly, there's not very much that's happening in bonds. When we talk about, say, for example, what's happening, and if you're doing Forex or currency, I mean,
you don't have to roll your eyes down.
If you're focused, I mean, cryptocurrency is a better trade than, say, for example, Forex. But if you're looking at, say, for example, commodities like gold, silver, and, you know, copper and stuff like that, that only gives you so much. So when you look at it, what's driving everybody, and now we're looking at companies in which that have growth, where it's showing you that, hey, they're still doing just fine. You focus your attention towards equities. Now, of course, you can also focus towards futures, because it also, you know, kind of tells you a good gauge of where the market is going for sure. And I think Ian did that very, very beautifully. And so when you see a lot of the activity is really where equities, AKA stocks, because of the fact that that's where people realize where they can get a return. There's no return. There's no real significant return in those other areas. And by the way, I don't hate Forex. I want my people to make as much money as possible. And honestly, that's just not a vehicle.
So with the, if we're checking in on volatility, today it was 33.60.
Mm-hmm.
And many of the cousins want to know, how should they be thinking about the VIX when it comes to some of these dates that we have coming up, like the 9/14 for the options chain extension, and then quadruple witching on 9/18, or excuse me, 9/14 and 9/18.
So if many of you are focused on long term, which I suspect that, you know, of overwhelming majority of you are, then really it's not going to significantly matter, except for the VIX allows for the spread to drive between the bid and the asking price. So which means that you can see those prices stretch when you're looking to buy. And at that point, it makes it a little bit easier for you to kind of say, okay, hey, look at the last price, look at the bid, look at the ask, and kind of get a good gauge of where to set your limit prices. You're going to probably see that if the volatility stays high. Like, for example, I don't know if a lot of folks watch the options chain today, but as the market was dropping, we also saw that the asking prices were also rising within these positions. And that's also something that's telling you something, that one, the implied volatility is here, but at the same token, you still see folks that are still interested. For those who want to go look at bar chart, you can see that when you look at the interest of puts versus calls, the call percentage is still ridiculously high versus the put percentage. So
I want to shout out Ian. I see all these pandas in the building, so shout out to Ian. What's up? Glad to have you in the chat with us. Hella pandas are going crazy in the chat.
Yeah, I see a bunch of red apples and pandas.
Wait a minute, but why the apple though? I thought it was supposed to be like a red, like octagon or something.
Unless there is some type of secret message. I mean, we only know of one company that's named after that type of fruit.
Loading up. Okay, I see y'all. All right, so, okay, moving on. I can just check in here. Yo, first of all, let me shout out these cousins because y'all, the amount of research y'all have done as far as the news today, many of you, what's cool is that there are a lot of trends. So there are themes. You all kind of pretty much want to know the same thing.
Should I give it a little cheat code to the what's happening also?
Yeah, go for it.
All right. So, you know, here we at the Come Up series, we're all about the truth. So let's have just a small little splash of truth telling, shall we?
We shall.
All right. So what you're seeing today is that you're going to see over the next few days, you're going to start seeing that the hype machine from Wall Street will start to kick in. And you're going to start seeing that a lot of folks are saying, well, hey, is the rally over and all this other stuff to rile up retail investors to really get them to say, okay, hey, should we be selling or whatever else? Hence the reason why we did the episode prior, stick to the script, because I mean, we see beyond that. The next part, which you're going to also start seeing, especially, I hate to say it, the folks at CNBC, some of them are some real ones. I mean, the others, you know, they're there for a paycheck and they work for a system. And that system is definitely going to start, you're going to start seeing the conversation shift from, well, is it time for us to get out of tech and is it time for us to start focusing on, let's say, for example, value companies or value plays? Is it time for us to start focusing on financials? Is it time for us to start focusing on companies like Royal Caribbean? Like asking yourself, why was Royal Caribbean even up in the first place? I'm sorry, I haven't seen a single ship at the dock take off. I mean, have you?
No.
Okay. And honestly, even if it was taken off, I'm sorry, I would have to wait a while till after there's a vaccine before I'm hopping on any ship. But it's like you're seeing all these things in which that they're saying, okay, hey, the rotation is here, or the rotation is upon us. No, it ain't. I guarantee you this, and I'm probably sure that for many of you that watch EYL and listen to Ian, we probably say the same thing. You're going to see monthly corrections that take place, and you're going to see some volatility that's going to take place. But if you're sticking to the script, we know what the trajectory is. We know what these companies will do. We know if you're really, really in the know, which means that you're paying attention, studying up on fundamentals, reading up on knowledge, and or say, for example, on news, reading up on analyst research reports, also checking, say, for example, the chart for analysis. I mean, we know what's up. We knew that, say, for example, a lot of these companies fell outside of the band or jumped outside of the band and they needed to come back into the house to, you know, not get sunburned. We also knew that a lot of these companies had reached a certain point in the RSI that it was just like, all right, you've had too much fun. It's time for you to come back inside and take a nap so that way you can regain your energy. We know what this is. But you're going to see a lot of narratives that will be thrown at you over the next, I'd say, a week or so, that will be probably trying to give you a different type of narrative play. And I guarantee you they're being fed a story from somewhere else.
So kind of along that line, for like all of our short-term traders? Like, how can they sift through the news to figure out what's legit and what's just the hype piece?
I wish you good luck. I definitely do, because I definitely don't believe in playing the short term unless you actually have some significant concrete data. Now, if you have that, by all means, go out there and make your paper. But if you're guessing, like if you're significantly guessing just because of the fact that you've seen something on a chart or you heard somebody say something, hell, even if you heard me say something, be skeptical of even what I say, what Jolyn says, or even what Kamari says, or anybody that comes on the Come Up series. Be skeptical. The reason why we want you to do that is because we want you to go out there and be able to look for the information for yourself, so that way you make educated and knowledgeable trades or investments. Because this is not just about options trading. You can also do the same thing, the same picks that we pick. They're great stocks. They're great companies, period. For those in whom which that are out there playing earnings, stop it, because it's not like you have a crystal ball. You're guessing, and you're trying to say that you're making an educated guess. I mean, I haven't seen a single person that's DM'd me yet that says that they've given me any type of significant data that points to the fact that you're playing this week-long options trade because of earnings. So, for example, a lot of folks who are trying to play the DocuSign earnings call, I'm sorry, you know. Next case.
Hilarious. All right, let's talk about the homework you gave last, I guess it was on Tuesday, about a certain confidential IPO that some of the cousins are calling really evil.
Well, if the shoe fits, wear it, right? So the reason why I want people to understand, because a lot of folks run into a lot of hype going into IPO season, where you see companies going IPO because you're like, hey, I can get this early on pop going into earnings or going into the IPO day where it debuts, and then the stock just like pops by, let's say, anywhere from 20 to like 50% or sometimes 75%. And that's dope. I mean, but at the same token, it's like you also have to do your research on a lot of these companies. A lot of these companies are already getting their early buyers. Now, of course, they're doing confidential, so it's going to be a little bit different. But most IPOs, they normally have their significant amount of buyers that are already buying into the stock long before it IPOs, or even on its road to IPO. Hence the reason why they do initial public offering road shows, where they meet with institutional money for them to buy a certain amount of stock before they actually IPO. But for this specific company, this is a company that ultimately focuses on, they say that they focus on data. They say that they also focus on AI technology, and they are working on a few governmental contracts. But here's the problem. And this is, keep in mind, this is coming from me, a person who invests in AI and a person who invests in tech startups. But there comes a fine line where it's like, okay, hey, have we gone past the point of humanity where we're using information and we're using data that can be considered, say, for example, weaponized against people, AKA also people of, say, for example, specific skin colors or specific economic backgrounds. And they are doing that. Like, for example, imagine a company in which that was able to license its data or its technology out, and say, for example, a cop pulls you over, and by them pulling your data, they are able to know exactly where you have been based upon, say, for example, traffic data from cameras that watch traffic, from also other things like, for example, when we get to a certain point where cars become smarter. I mean, that's just, you know, kind of like tinfoil hat, but we're just saying picture that. Then we're also talking about, as it pertains to loan programs, as it pertains to them being able, where they're using AI to be able to decipher whether or not you qualify or not based upon specific parameters. And the other part is like, you know, like I said, I would rather, if you're an AI company, use the data in which that ultimately enriches the lives of the people. That's the focus. If you're doing that, where you're enriching the lives of the people in which that also needs significant, say, for example, help, like, for example, using AI to improve education by making education cheaper, but also providing the tools that also help, say, for example, kids learn, either with learning disabilities or whatever may not be. That's dope. But to use it in forms in which that you're using it for tools to deny people, I can't get down with that. So that's why I always say, like, when you look to invest in a company, know what you're investing into, know what you're getting at. And here's the other part. Would you really want to invest in a company that also, say, for example, withholds this information from you, the potential investor, where you're investing in something that you don't even know? Like, for example, is Planeteer even profitable? Think about it.
I'm looking at the time, and it is about that time to get into this foundation that we were talking about earlier. So everyone, before we transition here, this is a great time to get a whole fresh new, I don't know if you're on an iPad Pro with an Apple Pencil, you need a whole new sheet. Or if you have a notebook, just go ahead and turn the page because you need clean space. This is about to blow your mind. I wish we had like lasers or something, you know?
I know, right? Like the pew-pews. All right, so let's get it going. I've been pretty excited, everybody, about doing this episode because, I guess apparently I have to install the plugin in order for me to use this PowerPoint in the background. Thanks, Zoom.
I told you, they try to be Hollywood now, but they actually were humbled today.
If only the software could be. By the way, here's another piece of homework for you. Is Zoom on Oracle's cloud service or is it on AWS? A lot of folks are getting some conflicting reports about where is Zoom hosted. But without further ado, can everybody see this?
Yes.
Today is all about something in which that really means a lot to me. This is a Come Up Series exclusive. Today is called the Setup and the Rolling Fours. Now, of course, you see the title on today's episode called A New World Rebuilt. And if you notice, if you ever go back when say, for example, when after this video is over, go back and look at the videos and in lineage of when they released and look at the titles. You know, we've always believed that that we leave gems for you to show you that we're going places with the Come Up series. And so, of course, we can teach you how to trade. We can give you the basics and fundamentals of investing in stock. But what good is those things if you're not, say, for example, understanding where you're going? And so today, we're going to do that. This episode may go a little bit longer, but I mean, I guarantee you, this is the episode that you definitely are going to want to share with folks, and you'll be talking about over and over again. But I'd be remiss, or we would be remiss here at the Come Up if we didn't share it with you, because our goal is, say, for example, you're trading, but what are you trading for? Like, for example, the value of your time. Where is all this going? And what if I was to say, you know, that there was a possibility that you could walk away in 4 years? You know, ask yourself, if you could walk away from the job that you don't want to be at, or the job that you've been working at for years, but you're ready to step away, you know, would you do it? And if it was the case, what would you be willing to give up in order to do so? Now, this is just an example of, you'll probably hear many different examples and strategies, but this is just a strategy in which that I've actually used and worked with people on to help. And now I'm giving it to each and every single one of you. So bear with me. No tears today, though. So this is a For the Culture plan exclusively for each and every single one of you. So first, you guys have heard me talk about in the value episode, the 70-30 rule. Now, the 70-30 rule is just very simple. You make out of the 100% of the income that you bring in, 30% of that goes towards expenses, 70% goes towards savings and investment. Now, of course, a lot of folks say if you can get to 50-50, then that's a dope start, and then keep decreasing those expenses as you go along. The best way to do it is, and a lot of you, when you first see that 30% of expenses, you're giving me the side eye, like, wait a minute, hold up, Mark, what's going on? But then I want you to like really stop and think for a second. I want you to just look away from the screen, whether we're on your TV or we're on, say, for example, your laptop or iPad or phone. What I want you to do is look around the room around you and ask yourself, out of everything that you purchased around the room, does it make you money? Does it help build towards, say, for example, your financial security and future, where you can truly say, I can walk away? Now, if you do, then congratulations. If you're in a studio, then you got me. If you're doing something, if you're currently in your place where it's like, all right, well, this is actually doing something for me, by all means do it. But for the most part, this is it. So let's imagine, and this is the why. Like I always tell people, like the who, the what, the where, the when, those are great questions, but the why really gives power to everything. The why gives purpose to why is it that we're here? Why do we do things? So let's just, for example, you can always readjust this if you'd like, but let's say, for example, that you make $100,000 a year. And let's say in a perfect world, let's say that those like this is after taxes, you come in at 100K on the dot. Okay. You take the 30%, which is expense, and then which includes rent, utilities, and food, etc. And then you have the 70%, which is investment. This is where you make your money work for you. Now, many of you are doing that right now and making your money work for you. The goal is you want to keep that going. So here's words to ponder, and you probably heard me say this. Live how most wouldn't live, so you can live how you always wanted to live. For example, I live very, very minimal. Super duper minimal. I've always pretty much have done that. And I thank God for my grandparents, in which that taught me that you don't need a bunch of materialistic things in order to make you happy. Focus on the things in which that matter, focus on consistently building a strong financial future for yourself, and that will allow you to do great things and it will open up more doors for you. And in my lifetime, it's allowed me to do that. It's allowed me to be able to, start companies. It's also allowed me to be able to provide for my family and for the folks around me, and to be just that beacon. But before all of that, we're talking about college days where, say, for example, where it really stuck out, where peanut butter and jelly sandwiches were my best friend. I could have easily gone out and ate like a king at, say, for example, Zaxby's or whatever there was at the time, but I didn't. Every now and then I indulged, but for the most part, I didn't. I kept it very simple, and it's like I live very, very minimalist. So what do you do with the 70%? Every dollar that you have, like I said in the previous slide, is an employee of the business of you. So you are the business. You are the business, and you want your business to bring in as much revenue as possible. I mean, we judge businesses all the time when we talk about businesses that are in the stock market, right? If they're bringing in revenue, and if they're bringing in lots of revenue, then they're ultimately considered dope companies. If they're able to manage and minimize their expenses, but also bringing in tons of revenue, then that makes them significantly more profitable. We're literally transforming your mind so that way you can start thinking in that exact same format. This is just the beginning as it pertains to what you're doing right now. So your 2-year positions, this is just the beginning for you. But this is what will ultimately carry you on and sustain you. So let's take something, let's bring it into real world, shall we? So let's take that person who makes $100,000 a year, and let's just say in a perfect world without taxes. And we'll say quadruple witching is an opening. So which means quadruple witching you typically see a lot of activity take place where it opens up opportunities for folks to buy. So then you divide the 70K, in which that out of the 100K, 70K, you divide that over 4 quarters. Then we know that quadruple witching takes place every March, June, September, December. 4 times a year, kind of like 4 quarters. It's very simple. So let's just say the person drops in March, 17,500, June, 17,500, and same thing for September and same thing for December. Now, every quarter, your focus is, the main idea is invest. You deploy the week of quad witching or sometime around it, depending on whenever the opening opens up for you. You focus on long-term trades. So we're teaching you the discipline there. And your goal is the 5x, 7.5x, and 10x returns. Now, you can always adjust this based upon whatever your goals are, but these are typically my goals to start off at bare minimum. I'm always either looking at very base minimum is a 5-time return. That's 500%. 7.5 return. That's 750%. And 1,000%, that's 10-time return on your investment. And the main idea from there is you commit over 3 years. You literally commit over 3 years. If you really put it into perspective, you do 2 periods of these rolling 4s, which I'll show you. If you think about it, let's go back here so that way you can understand what I'm talking about. If you do this for 2 years, so each quarter or each quadruple witching period, you're putting in $17,500. You do that for 2 years, and then you put that money to work. Here's what happens. So let's take your initial investment. Let's say that, for example, a person, this is purely hypothetical. Purely hypothetical. Let's say that a person had existing investments. They started in the market at $50,000. And then their first return was a 5x return. So that netted them $250,000 or $200,000 in return. Then the second return was a 7.5x return, and that was $1.87 million. 2 trades over, say, for example, 3 years. That's where they got to. Now that's just with their existing capital. Now here's where the rolling 4s come into play. Remember that 17,500 that we were talking about? That 17,500 with a 7x return puts you at 131,250. Now that's just for the 17,050 or 17,500. Multiply that times 4, because remember, you drop 17,500 in every single quadruple witching period. That puts you at 525,000 when you put that all into account. Then here comes the second wave. You take that 131,000 and some change, and then it nets you at a 5 times return. Now remember, that's for each period, because with the rolling 4s, it allows you to also have discipline and control, because you're dropping it in for a 2-year trade every quadruple witching period, which are ultimately extended, and then pretty much your positions are staggered. So then that 5 times return turns into, say, for example, a 656,000, just a little bit shy of, just a little bit over $500,000. Multiply that times 4, that puts you at $2.625 million. Now here's the funny part. I actually said next year you duplicate it, but technically where you start at the 17.5, after you've done that first year, you do it again.
Yo. So, okay. There are a lot of fire symbols in the chat. And okay, some of the questions are, do you invest it all in one position or multiple positions?
If you want to have a focused position, you can definitely do that. I would say, like, for example, here's another cheat sheet. You ready? Are y'all ready? You can also play it within the ETFs market. Just imagine, what are the ETFs? XLK, XLY, Somebody's bay at SMH.
Yes. Talk about it.
You take your pick with the ARKK or ARKW.
For that fourth witching. But you know what's cool is that for XLK, remember, XLK is like the parent. It's established, it will help you pay your rent, and it wants you to be the best you could be. So it works hard for you while it's, you know, in your portfolio. So it's a staple.
Can I add some stuff? Can I add some stuff?
Yeah, add it. Mm-hmm.
So one slide that I couldn't add because of the fact that I was just like, yo, if I go into this slide, I'm gonna just go ham. But here's the interesting part about it. And I'm gonna go back to the presentation just so that way everybody can kind of get an idea when I post those numbers up. So we're gonna skip all the way to the end here, right? At the rolling forest capital. Mind you, you have two different sides of money working. Your initial capital, that's the long-term money that you shouldn't even really have to touch. The rolling forest capital, imagine what happens once you've gone after that second wave, after that year that you duplicated it, and then that money starts working, and then you're like, after 3 years, remember you committed 3 years, and if you really think about it, you know, you're playing a 2-year position with the mindset of every year and a half you're getting out. When you're ready to walk away, imagine what it's like to pay yourself for 6 months and then still keep the money investing and keep it rolling.
Mark, I think you need to say it again. I can't, from the comments, I can't tell that people are getting it because I just see comments. I don't see that many fire signs. Like I don't think they're fully getting it. I think you need to say it one more again.
Okay. From the rolling forest part. Now remember, you have 17.5 that's coming in every quarter. We're gonna call it quarter because I mean, it's every 3 months.
Are you saying that's income from someone's job or
that's
where
the income from your job that you saved, that you said, okay, hey, I'm going to commit to 70% and make it move. So now it becomes, and hopefully, can everybody see this on the screen?
Yes.
Okay. So what you're doing is, remember, this is just the first wave of what that rolling forest can produce. This is not even including the second. This is not including the second year of you dropping in another 17.5 in the second year. So that's why I said, imagine what happens when you do that.
Right. I think another thing to note is that you can have your traditional Roth, you can have your Roth if you qualify for that. And then whatever excess you have over the 6K for the maximum contribution, you got to move that to an individual brokerage account.
Yep.
Preferably not Robinhood. Pick something else. But you know, you're going to move the rest of that to your brokerage account. So you really minimum, a good setup is 3 accounts. You can have multiple accounts, but like if you have your traditional Roth, especially if you're working, then your regular Roth, or yeah, I'm sorry, you can have like a rollover and then Roth, yeah. And then you can also have your individual account, and that's for that overflow, because things, you know, we always say this is new math. So things start to change once you can get down to that 30% of your expenses. And then you have 70% to just into the market. And y'all, this is, you know, Ian had mentioned this. He always says, don't overtrade, right? So if you're just putting that in there, first quad for the quadruple riching, it's XLK. XLK, you just leave it alone. Next one could be XLY, leave it alone. Then, I mean, if you like me, you're gonna do SMH. And then your fourth one will be your stock crush or your side bet. You know, you just pick which one you want. I'm not telling you what to do. You can pick whatever you want. But what I am saying is that this right here will literally get you off the plantation. You won't be working for anyone. Your money will be working for you. And then you teach your kids this? What? They're going to be like, W2 who? They won't even know. They won't even know, y'all. They just won't. And I don't know about you, but I want some kids that just can work for themselves and like are free to be just be Black. That's all you got to do, and be generous and give back. For my kids personally, we're not here yet.
It's the new math, right? It's the new math in which that honestly, it's like we drop blueprints for you. Now we're building the foundation. Like I said, this gets us to a certain point. You know, each and every single one of you, like, of course, associate the math based upon how your finances are. The only thing that we just gave you was just a blueprint of how is it that you can apply it to yourself. So a lot of you, like, for example, this presentation and knowledge that we just bestowed upon you, it just gave you so many gems within gems and keys there. Like, think about it. I'll just keep it simple for this presentation. Now, I just showed you how is it that you can actually prepare yourself to literally walk away. The second thing that we've also did was we showed you how to set goals for your positions. So just imagine your minimum goal that you just set was 500% return on investment for a 2-year trade. Just let that sink in for a second. 500% is the minimum. I mean, 500% to 7.5%, that's going to be pretty much around within that range. That's going to be pretty much your average. I mean, spoiler alert. And then after that, it's like some of you are going to understand what it's like to reach 1,000% return. And that's just going to be, well,
you don't be drinking a lot of water, okay? First of all, we need to run that back. Mark just said 500% and 750% is average. Okay, y'all? Average. So let that sink in. Let that marinate. Let that sizzle, because that right there, that's some good math. 500% as an average, but who's average?
I don't really know that many average people.
I'm saying
it doesn't matter how much money you make. That doesn't equivalent to you being average. What defines you as average is if you only tell yourself that you're average.
So, cousins, as no one told you today, you are extraordinary.
Yes.
Okay? Extraordinary. And once you apply yourself, get these expenses together, stop being a consumer, switch to investor, and you have 70% of your income to throw into this market? What? Come on now. This is about a shift. We're talking about closing wealth gaps.
Yeah.
I hope you're really seeing this. This is like financial Wakanda, y'all. Straight up. R.I.P. Chadwick.
I mean, yes. I mean, shout outs to Chadwick. Rest in peace, brother. Rest in power. This is the reason why we showed up. I mean, it's one thing for you to make the investment and show that, okay, hey, that your options trades are doing X, Y, Z. Some folks are saying, Mark, do I put this in every quarter? Yes. If you have to, just to keep yourself from spending the money, just drop it in there. Just deposit it. Set it as an auto deposit. I mean, some folks have bill pay. Let that be part of your bill pay where it's just like, hey, this is going. Like the next time when you go to work tomorrow, and I know that a lot of folks are working from home, so just let this sink in. If you're working from home and yet you don't want to be at the place where you currently work and you want to have more time to do whatever it is that you want to do, then it's not that hard. The only hardest part that there is really just telling yourself, I need to change. And this is ultimately an opportunity for me to do so. Now, a lot of you are saying, well, it's like, what if I don't reach that 500%? The fact that you made 200%, 300%, 350%, whatever it is, and the fact that you're actually just putting the money away, here's the funny part. Like, here's where it gets even funnier. Like for folks that don't want to even play in the options market, because you don't even have to do the options market. Let's say that you just drop the money into the account every quarter and you just buy stock. You buy stock. Just think about it. Finding companies in which that produce, or index funds that produce, index funds will produce for you, what is it, 20 to roughly 30% year-over-year growth. And then on top of that, when you're looking at certain companies that are just innovative and have a bright future ahead of them, I mean, we'll put that around the same thing. Like we'll probably decrease it. Let's just decrease it down from 15 to roughly 25% year-over-year return. I mean, when you really put that into perspective and you're dropping that in every quarter, it's like no matter what, you're still coming out ahead.
And Mark, I know before you compared how much you would make just investing in stock versus how much you would make in interest from your savings account.
Mm-hmm.
It's going to be still a big discrepancy.
Most savings account give you, I mean, I think the highest savings account that I've heard is like a high interest savings account. What is that, 4%?
Right.
Those ain't even around.
I mean, when you look at it, like, and then for all of you that, you know, that have your money being thrown with, like, say, for example, financial advisors or mutual funds. I mean, no shade towards, you know, financial advisors that do their thing because, you know, everybody's different. But when we look at it in perspective, though, I mean, we're literally just giving you, like, here it is. That's the game. Like this is literally, like, just imagine. That's why we titled it. We entitled this episode "A New World Rebuilt," because now it's like you understand exactly. You have the tools now to learn how to rebuild it. Now we're going to consistently give you every now and then different types of tools and stuff in which that you can use and incorporate into your strategies. If variable change happens, we're going to be right there alongside with you if we find something even more advantageous. I mean, as markets move, then so too must you. We understand that. But at the same token, here it is. It's like you're literally building what your next world will look like. Like, just imagine that for a second. Like, and a lot of folks, like, it's hard. Like, I'm asking you right now, what would you take? Like, how many of you want to be free? That's the first question. Ask yourself, you know, why do I want to be free? Now, here's the other part. What would you give up in order to be free? Where nobody tells you what your value is except for you. You can wake up, you can do whatever it is that you want. And honestly, you control the ship. You write your fate. I mean, when we really think about it, here's something in perspective. Say, for example, that person that makes $100,000 a year. By you already making, say, for example, $350,000, say, for example, from that, say, for example, you invested $100,000 into the market and you make $100K a year. Then you make, say, for example, $350,000 from that $100K that you had saved up, it turns into 3.5. Or we'll even go a little bit further. We'll say $500K over a 2-year span. Just imagine that. You take the 100K and you divide that by the 5. You just bought yourself 5 years. Just like the options buy you time, the money in which that you're earning right now ultimately buys you the freedom to do whatever it is that you want. That's ultimately how you unlock the code.
Mark, you know what's wild though? You want to talk about what's really wild?
Go for it.
All right. So we are over 13,000 subscribers, right?
Yes.
And we keep saying the game changes at 50K. This is just like a little sprinkle, y'all. A sprinkle, okay? I'm just saying. That's all I'm saying. And I guess I'm sipping too. Actually, that was the goal. I felt that. I felt that. So we got people asking about taxes. Y'all, I cannot stress enough. You need to invest in a really good CPA. Someone who knows their tax strategy. They know your vision. They can hold your vision for you. They believe in what you're up to in the world. And that will change your life.
Yeah, 100%. And it's like a lot of folks, they get spooked by the taxes. I mean, like I said, there's only 2 things in which I fear, which is the Fed and the feds and the IRS. And that's facts. And the reason why it's like it's the IRS is because, you know, I'm like anybody else. I don't want them taking my money. But when I really think about it in the grand scheme of things, it's like it's passive income tax. It's not active income tax.
Right.
The active income tax is what you're paying for what they take out of your paycheck. The passive income is what you make on the side outside of your paycheck.
Mark,
Yo.
I definitely got to say something about that. So one of the things that will assist you in your wealth consciousness as you expand and you prepare yourself mentally, because this is a mental journey as well. Like mindset is really key as well. Is this decoupling of labor with dollars. Now, we all know what our collective history is and how we were actually property that was consumed, right? Our labor was attached to whether or not we survived, whether or not we even lived, okay? So when you start being able to, when you start marching towards freedom, and I'm talking about like financial freedom,
yep.
And you start to have all this money in your account that you did not labor over, and it came from here, and it came from here, and it came from talking to other like minds, it is a trip. Some of you may not even believe the numbers you see in your account, or say it's not real money, or it's not my money.
Or it's house money.
Right. Yo, if you got E-Trade, best believe you can transfer that money out of your account into your bank account, go to the bank, and have that money in your hand. So it is your money. Those are your employees. So don't get caught up in that, like subconsciously, I didn't work for it, so it's not really mine.
Yeah.
When we talk about a whole new world being built, it's a world that does not require your physical labor.
That's the key. It only required, like I said, from day one, the more you earn, the more you learn, the more you earn.
And you know, Mark, I've been telling you, I'm trying to be a lady of leisure. Okay, I don't want to work. I'm trying to chill. Okay.
I think the interesting part is that, which is super duper cool, on one hand, and then on the other side, it gets a little scary.
Talk about it.
It's crazy because a lot of you are thanking me for, hey, Mark, you did this, and like I you know, I'm up this and everything else, and it's like I owe you all this other stuff. Look, here's the reason why you don't owe me anything. I'm just like any other person out there that was literally telling you a message that told you, say, for example, this is what I would do, and these are the investments that I like, and these are the trades in which that I would go for. Here's the funny fact. Here's what you did. You did your research. You set up the account. You learned how to actually say, okay, hey, how do I execute a trade? You executed the trade, and now your money's growing. You pushed the button. Just like you're here watching us on YouTube right now. You did that. I didn't do that. Like if I could just snap my fingers like Thanos, and then all of a sudden 100,000 or 1 million people are watching, or 1 billion people are watching, that would be super duper dope. But I didn't do that. That's each and every single one of you. You did that. The only thing I did was I'm just a brother that came out of the shadows with a message, and also with the knowledge in which that I have, I just put it out there on the table. I didn't ask you for anything in return. We still ask you for nothing in return. The only time when we ask you to do something is really to give to organizations in which that definitely need your dollars. That's it. Maybe to like and subscribe, tell us how we're doing. You know, outside of that, this is all of y'all. This is each and every single one of you that literally took the time, that you're dedicating more time. And here's the funny fact. I guarantee you this, for those in whom which that were rocking with us from the day that we just stepped onto the scene, either on YouTube or even further back when we stepped onto the scene in Facebook. Ask yourself this, and if you've been keeping a journal, then kudos to you. But if you haven't, that's fine. But here's the part. You know yourself. Ask yourself just one specific question. Am I a lot different than I was back in July versus where I am today? Do I think the same that I used to think back then, or has the game changed for me, where like the beat and everything else is different? If it is, you did that. And we're not done.
That's what's so dope.
Yo, this has got chapters.
Chapters, footnotes, cliff notes. Yo.
We're gonna keep this rolling. All right, so
that's it. Mark, that's it. That's it. That's it.
So yo, what do you guys gotta say? Because I did a lot of talking.
I said my piece.
Go ahead, Kamari.
That was blueprint. Like, talk about blueprints. That was for sure a blueprint. And something that's scalable to be able to create, like Jolene was talking about, generational wealth. You can shift games with that.
So if you ever need somebody to understand, like, okay, hey, where you're starting and everything else, and if you're like, because a lot of you have been asking for validation, or you're trying to share it with your friends, imagine popping up on, say, for example, on one of your friends and showing them what your account looked like, and then dropping a video like this and say, that's my mentor. Welcome to Gotham, y'all. Anyways, we got to go because apparently I got a date with Instagram.
You know, I'm gonna be talking trash in the comments. My favorite thing to do.
There it is.
Oh, I got one last thing that I wanted to share that was just general.
Go for it.
So Broadway Federal Bank and City First Bank, two Black banks, they are merging to create the largest Black-owned bank in the U.S. So I thought that was pretty dope.
Yes.
Wanted to shout them out.
Yes, I can't wait till I see that prospectus of what it looks like once the companies have merged.
Yes.
Here's another piece of homework for folks. I want you to find out how many Black publicly traded companies there are on the stock market.
Some good homework, y'all.
All right, y'all. Well, this has been an awesome episode. Thank you for joining us. For those of you that want to join us on Instagram for the wonderful After the Come Up series after show, you know where I will be. Just give me a little bit of time just to kind of gather myself because I did put in a lot of energy towards this episode, but I will see you there. If you like what you saw, go ahead and hit the like button. If you didn't like it, I mean, hey, at least you're still here and you're watching. Go ahead and hit the dislike button for all, you know, and just tell us why. What can we do better? And then on top of that, if you're not subscribed, I don't know why. I mean, clearly, I think we produce some pretty dope content. And if you want to know when we're going to actually be releasing a video or when another one's coming out, go ahead and hit the notification bell for all notifications. So that way you can be in the know. And until next time, I guess we'll see you on Trade Talk Tuesday.
You didn't say your name.
They know who we are. It's like, I'm just kidding. Until next time, y'all, I'm Mark Monroe.
And I'm Jolene GC in a place called Free. And yes, I do follow the plan. Okay.
And I'm Kamari.
And this has been your Come Up. We love y'all. Have a good night.